Hi, Warriors. Patrick, how are you? Bran, Mary, hi. Sinatra, AJ, Stelios, Blake, Kman, Dale.
Morning, Dale. Morning, everybody.
Hey, how are you, buddy?
Yeah, good. Yourself?
Good. Let's start here. We're prepping the F.A.C.E crowd all week for this sell up here at 680 to 7. You take it? Did you take it?
I did.
Yeah, I did.
But I didn't run it all the way down. I closed it yesterday around 136, the figure.
Yeah, well, that was a nice scalp.
Yeah.
Right, day trade. All right,
It was.
And then a failing rally. So, my question is this just an ABC and we're going to roar again? What lit up Euro, Kman?
Slightly better data and also European yields picking up. German inflation still showing a high one, and yeah, some correlation with those Chinese data perhaps as well, because they are perceived in the market as probably being a bit better for Europe than the States, for instance. So that's and we've basically undone the end of month move, which was lower yesterday in the euro. All the while the US data showed some weakness. So and today we've seen
we made up for it.
Comeback of the euro in on all fronts, really. It's not only euro dollar, it's also the euro via the crosses is doing much better.
Okay, well, Ryan, good morning to you. Tip of the hat for gutting out euro pound. Nice. And I'm sure I'm pretty sure you took the sell in the end up there. What are you thinking?
Yeah, morning, Dale.
Good morning,
yeah,
buddy.
I think everyone was queued up to hit that 137.
Yeah.
I got on it as well. Managed to make a mess of it. I flipped it long at 136.50.
Yeah,
well, you're sometimes being tactical ends up tactically shaking us out of good trades. I know. Who doesn't do that?
Anyway, I don't know about tactical, more tactless, I think, for that instance.
So what do you think? Just a little correction or major high?
I've got an inkling we're potentially going to see a major high here. I made a mess because I've been thinking about my core shorts.
Yeah.
And that was a bit of a line in the sand for me. And instead of keeping some of the short on, just improving the average a bit, and then I'd have been in a bit of a different position this morning. I've decided to flip it all, but we can't trade backwards. For me, the feeling I've got that we might find a top up here is because of how much we've repriced the Fed. We've repriced it quite a lot. Look at the move since February. Down at the 128s, we've done, really a big move. So how much more can we reprice? And we finally hit a big technical level. Price has halted. It's come off, 150 pips. So it's setting a big marker now, and yields have set a marker right there, 3.98. We've set a marker in yields.
Yeah, we made a marginal new high in the 10-year yesterday by a BIP. Yeah, and came off, looked kind of ugly. But I look at this, if it holds, there's no reason why we can't. It looks like, if I was an option trader, I'd put on a volatility spread with the market compressing like this, where you'd buy a put and a call. Because, only God knows which way it's going to come out. I would say the recent trend saying higher. And, if that happens, then there's most likely another run in the end. And this is just an ABC. And maybe we get to some of the numbers that Grega was talking about yesterday. I think, were you around for his wave count? I think he was talking 39-ish.
Surfing the waves.
Yeah.
I think I'm not going to rule out that we go higher in yields or dollar yen, but you've got to look at the price action. The price action says 10-year yields can't get through 3.98, right? And for now, price action says we can't get through 137 in dollar yen. That's trading. We look at where the levels show up and trade them accordingly.
You know, yesterday the dollar was weaker most of the day with the late session fade. And the S&Ps made no hay out of it. And in fact, yields came down from where they were intraday, about 7 bips. And this was the best the market could do. Now we really have a weak dollar. And, you know, this would be a bad day in the S&Ps when it's acting good, only up 12, okay? And someone keeps coming in and selling this stuff. I still think that there's more downside left in here, which, just doesn't act well with tailwinds. It had tailwinds all day yesterday, has tailwinds all day today, and net on net were lower. That's not the way bull markets act, in my view. Stel, I want to get to you because, if this is a major top in yen, then this reversal day we had in gold and silver, you have to respect. There we go. Here's the reversal day with follow through in gold and silver. I was talking low 1800s, 1803 when earlier in the day I didn't take it. I missed it. The yen was almost the same trade. What are you thinking about this 2-day bounce in metals? Just a relieve oversold or maybe something more significant?
Good morning.
Good morning, buddy.
Well, we talked about it on the Flow Show as well this morning. I think this is just a correction.
The bounce.
I would love it to be the bottom, but I don't think it will be because I think yields are going to keep going higher, and I think the 10 year is going to go towards that 433 high. But it's been a good 2 days. Very nice bounce, very oversold, especially silver. A friend of mine was asking yesterday, "Oh, I want to buy some silver," and I'm like, "Yeah, let me have a look at the charts." And I looked at the RSI; it was below 30, so it was 20 something on the daily, if I recall. But anyway, it was oversold. So yeah, relief bounce. But I'm still not convinced. If in the short term and going forward for the next, I don't know, a few weeks, I think yields are going higher, and we're seeing European yields surging as well. And that's my core view. Hence, I am still very hesitant to go, proper position size long. I only have a small long so far. From a little bit above here, so I'm I'm in the red, but you know me, I accumulate slowly and distribute slowly.
Well, if the yen makes another push, I don't know why. Look at the difference. You pointed out RSI that you told your friend, so we were here. Look at the RSI structure that we have in gold, in silver, and then look at it in gold. Okay, so gold on its new low was 37 before it turned up, whereas silver at its low yesterday
was off the charts. It was 20, right?
24.
Oh, 24, yeah.
So it's a weaker structure is the point. So perhaps silver washes to one more new low and maybe gold doesn't.
Well, it makes sense because we are on a downtrend overall, and silver always underperforms on a downtrend. So this all kind of makes sense, and as we see the dollar sell off today and a little bit yesterday, we see risk and metals bouncing. It's all one trade. We should just trade Bitcoin. I don't know what to do.
Let's trade the Dixie. Looking at the gold silver ratio, this kind of momentum up here would have me, the real simple implicator is implying that this is not the top because both price and momentum confirmed here. So maybe there's another push up in the gold silver ratio. It's not the kind of thing I would short. It has a much stronger RSI look than yen did. When yen got to its high yesterday, all we got to was 70. See that? And it was pretty glaring. I didn't have to put my cursor on this to see if it was lower than here. So weaker RSI structure in that gold silver ratio. And normally the gold silver ratio and the dollar go together. Something I learned this year, I didn't know, but pretty tight correlation between those two. Higher gold silver ratio usually happens with dollar strength. So so there's a couple things saying that maybe the dollar move isn't over, and this is still just maybe an ABC too, and we get one more rip. What would do it? When's ISM?
We have ISM manufacturing today, and tomorrow I think it's non-manufacturing, right?
It's in 2 hours. ISM manufacturing is in less than 2 hours actually from right now. And good morning.
Hey, what do you think about all this gobbledygook I've been
talking
about?
Well, first of all, I got stopped out of a dollar long. Fortunately, I was still short dollar yen. So it's kind of messy. When I got up this morning, I was
surprised to see this.
I was surprised. And so the first thing that I did is I jumped in the chat room and I'm like, hey guys, I just woke up, what happened? And, got some great commentary from Kay, right off the bat, because he was in there chatting, amongst other people too, but he happened to be, really active at that point. And he kind of clued me in, and I was like, man, that's some massive move. But what I did notice, and I don't know if you guys have discussed this yet, Ryan, Kman, the sterling is not following suit. And I know the euro sterling just ripped higher. Great call, Dale. I know you were talking with Ryan about it earlier.
Yeah, Ryan gutted it out.
Yeah, that was a I'm gonna screw you up, down, and sideways type of move for a lot of people.
Look at that.
The way that euro sterling move. However, I know that the cable is really underperforming, and that's a big risk.
That's a change.
Well, it's a big risk for the pound, I think, in general. And I know a lot of people have been leaning short or trying to be short the sterling, and it's been a tough trade. But maybe there's going to we're going to actually see some meaningful moves if the dollar actually finds a sustained bounce. Decline. So I don't know. I look at the cable, and that would worry me. If I was long sterling, I'd be really worried after today. What was the reason why it underperformed, guys?
Just today, or
yeah, today. I'm sorry, today. Didn't Bailey say a few things?
Sorry?
Didn't Andrew Bailey say a few things today?
Oh, he came out with his usual waffle, fence sitting. He speaks, the pound goes down. That hasn't lasted long. Obviously, it's bounced since then. It looks a mix of end of month stuff. I wasn't on board so much with the Brexit stuff being a reason why the pound gained. And the euro is strong across the board. European yields, the market hiking up rate expectations for the ECB. Gold is now seeing a 50 pip hike coming instead of a 25 pip hike in May. ECB is the bigger of the banks. And I think that's just outweighing what the pound's doing.
I mean, when Bailey says, I would caution against suggesting either that we are done with increasing bank rates or that we will inevitably need to do more.
Platinum looking great, guys.
I'm sorry.
That's all right. Platinum looking great, guys. Something we talked about since the beginning of the week. So platinum's going to lead this thing if you're a precious metal bull. Look at the difference between, gold, silver's a relative weakness, but platinum, and look at that move. So I guess the reopening trade is still on in China.
Yeah, I don't know.
But then look at oil, Dale.
Huh?
Look at oil. Why, the same thing, the reopening, big beat in manufacturing PMIs and services PMIs in China. If good China data usually means good global data, why does oil collapse on that? You think oil will be sailing up in the 80s on that China data.
Yeah, it's so messy.
It's
it's really hard to
get your head around right now.
Yeah. I'm bearish longer term, but I thought that there was a chance that we could complete a corrective pattern up here before we roll over.
Well, Dale, do you mind if I take the charts here?
No, not at all, my friend.
Yeah, let me let's go over a few things, talking about reopening and where equities are at. Let's really kind of hammer out a few things here. First of all, the euro, we have an inverted head and shoulder pattern. So if you guys think the dollar weakness is done today, I think that you have to look at this chart and go, well, there could be some more. And remember, the 38% retracement of this euro, comes in just above 107. So you've got some distance to travel if it's going to continue to move. And then don't forget, the dollar yen yesterday had this is an outside day at the 200-day DMA. An outside day, is when, the highs and lows both surpass the previous days. And when you see a negative move on the day, that outside day will lean that direction. So in this case, the bearish outcome is not, is totally warranted. Where we go from here, you still look at, some of these breakout points at 134.50, 134.60 is going to be it. And I think myself and the entire rest of the world is trying to lean into some dollar yen on the short side here. I don't think I'm like the only person that's been talking about it the last couple of weeks about being short up here. Like Ryan said, he was short. I don't know why you got long some, Ryan. That definitely was.
Still asking myself.
Yeah, I know. Well, look, we all make mistakes when we trade. That's for sure. I mean,
never trade yen, never trade with hemorrhoids, Ryan. That's one of my rules.
That's gross, Dale. That's actually really gross.
Unless
are you talking about being a bottom picker or what?
Yeah, that's it.
Once you've caught me speechless.
Remember, Dale, if you're gonna bottom pick, just get ready for some smelly fingers.
Yeah.
Anyway, all right. Sorry, this going south. All right. So anyway, you look at like some of these dollar pairs and we could see some continued dollar weakness here. But look, notice this is what I was talking about with the sterling. We have this, and I know this is the chart of the day yesterday. If you guys are on ForexAnalytix, or not even on ForexAnalytix, you just go to the blog. The chart of the day yesterday is the cable. So go take a look at that. It's free. But really it's just more of descending trend line. It's still holding. Actually, this is not. There you go. Descending trend line, still holding, longer term double top, bearish wedge. We're back at a 618. So, I think upside's fairly limited here. But you talk about like the S&P and you go over to the S&P. I have to say this, that, if you're a bull, you're probably pretty nervous right now.
Yeah, you
as an S&P bull. And the reason why I say that is the same reason that I said that with the euro when we were at 109, 108. These bounces that you see in the stock market are very, very negligible. And so and when you have that, do you know what that creates from a technical standpoint? That creates a pennant. So when you have a pennant is a continuation pattern. So when you see a pennant that looks like this, then you know that there's a higher probability, if you had to throw a number on it, probably 65% of the time, maybe you're going to break lower when you can't sustain any type of bounce. That's what you get in the stock market. And so can the stock market
That's
bounce?
Grega's target, bro.
I'm sorry?
That's Grega's target when he was here yesterday.
That he was discussing yesterday. Well, that would be logical. I mean, look, that's a 618 retracement, a lot of support down here. I mean, why couldn't we? And then also that puts us back in the channel, which means that there's a big false breakout, which also then means that there really is, probably much longer term downside implications because of that big circle right there. That's what it would mean to me, like more longer term. But just from a intraday technical perspective, you go back to this and you say, well, we can't get out of our own way. The S&P cannot, and I'm trying to get rid of this stupid.
Yeah, it had a weak dollar. Yields came down yesterday, Blake, a little bit, and they keep selling into the rallies.
Yeah, and now we're having this bearish consolidation, or a quote unquote pennant at these levels. And so now you got to think about like what are the repercussions of stocks if stocks can't rally and they sell off? What happens there? Well, then you got to start looking at the bond market and start thinking, well, if the bond market's catching a bid because we're coming out of this wedge, which we are, by the way, you know, and you could, I know some harmonic pattern is right here too. This would be a, oh God, thinking of the name.
Bearish Wolverine.
No, stop it. It's a,
Back
oh
crack.
God, it's a butt crack. I forget what it is. Somebody.
It's a dragonfly.
No, it's not. It's not even real. I'll have to come back to you guys on that one.
But PW,
it's a brazier.
You guys are really being a bunch
upside
of
down
bozos right now. It's not. That's not it. Anyway, stop it. So if you were Paul Franco, you'd say it was a monkey pattern. You know, that's all he calls it, monkey patterns. Anyway, if you get a rally in the bond market, then because stocks are coming down. What does that mean for yields and what does that mean for the dollar? Because that's the real question then, because we're going to go, okay, does the dollar catch a bid because you got risk aversion, or is dollar going to sell off because you got yields coming down, maybe in the near term? So that's going to be the real question mark. And I know, Stel, as you mentioned Bitcoin, but I just got to say that there's no reason for you to be owning cryptos if stocks start selling off at these levels, which I think it looks like realistic. And then, and by the way,
I actually said trade Bitcoin, not own. So both ways.
I know that
right?
You're trying to squirrel some away in your little cheeks there, like squirreling away like a little squirrel would in the wintertime. But anyway, yeah. So you see some of these moves here, like the Aussie, the Kiwi, they're probably decent fades up here. And if you would have gotten, if you're using ForexAnalytix, I did get stopped out of my Kiwi overnight, and I reapplied that trade just about an hour ago because we're right up into the resistance zone. So anyway, so there you go. That's my take. So what do you guys think going into we're really, everybody's kind of waiting for next week, but we're gonna start getting jobs data trickling in. Components of it with the ISM. What do you guys think about today's price action? Let's go to Stelios. What are your thoughts here regarding this move that we've seen overnight and what we're going to have today?
Well, I think yesterday's numbers were weak, and the market is now starting to give the Fed more reasons to maybe support the dovish side, but I think the problem is that data is now coming in mixed, and we have employment still looking okay. But the other piece of and obviously inflation not dropping as quickly as the Fed would like, but PMIs and stuff, they're starting to, and consumer confidence yesterday was very bad. It's a big miss. So what do I think? I think probably a miss on the data, but it's we're going to start getting very mixed data. So this is, I think, today's market reaction is on the back of yesterday's bad US data. That's what I think is happening.
Yeah, so also, you don't think it was a bit of an unwind of the month
bit of a relief rally as well? Yeah.
So what do you make of silver and gold here? Because gold's we broke this descending trend line. I actually still am targeting lower in gold. I still think that this bear flag is going to play out, but we're holding really a 618 retracement. We're seeing some buyers come in. What do you think? Is this the place? You're a big metals trader, so do you?
Fan.
Well, I mean, relatively speaking, I guess, but you are a metals fan, and you're always looking for good places to be on the long side of the metals market. So what do you think of gold and silver here?
First of all, Bran, I don't roll the R, so I am not Steve. I'm Stelios. Okay. Steve is the one that rolls the R. Anyway, what do I think about metals? I think we're just seeing a little corrective bounce. I think yields are going higher, and for that reason, I think metals are bouncing a little bit as a correction. We could get towards that 1860 level you have there in gold. If we get there, I am personally going to be looking for a short-term trade to short it. And it goes to show I trade them both ways with a heavy bias on the long side, but I do trade them both ways.
That's what she said.
Yeah, I play both sides.
Sorry, had to throw that out there.
And same with silver. Only silver underperforms quite a lot, or overperforms on the rally. So I think this is just a corrective bounce.
Okay. Well, I'm going to kind of agree with you there. Dale, you have anything to say about that?
I'd love to see silver put in one more new low without gold. And
Did you see this
I'd buy silver.
this
Yeah.
bullish outside day yesterday in
Yeah.
silver? I mean, it's giving us the reason why we are bouncing here. I mean, that makes a lot of sense to me. So
Yeah.
All right,
so
hey, Ryan, what do you make
it
of
didn't
this
get to
price
your
action?
61.8 level, Blake. So if we got down there, you'd have a much stronger RSI pattern because we got this bounce. It'll build the case for a bottom. Before you get bottoms and tops, you need markets either accumulate or distribute. And it's not just that doesn't happen in one day. It happens over a series of days. That's why if you trade inflection points, you have to be patient. It usually isn't a spike. It has to do work.
Yeah. Well, if we now looking at that and you look at the 618 and you see this oversold bounce that we're getting, is this a case of horseshoes and hand grenades, and technical analysis? I mean, was that close enough, for government work, right?
Yeah.
I mean,
yeah,
we came real close.
It is.
Yeah.
But you also have to be prepped. And so you caught you bought it yesterday?
What?
You should have taken partials if you bought it yesterday.
Oh, yeah. Yeah.
Then you don't care.
You
because right now it's a bottom. We only know if it's the bottom looking in the rearview mirror.
Yeah, that's true.
Right. So you trade anyway.
It's a great point. Ryan, what do you make of today's price action? Where's your best bet today?
I'm going to be looking for a strong ISM to tap that dollar yen again if we get anywhere close to that 137.
Yeah. Tap that ass again. Wow.
Tap that ass again.
You said it, not me. You just said you're going to tap it again. Okay, so you're going to be shorting this on a rally back up to 137 if you can get it?
Yeah.
Okay.
If I can get it.
Good luck with that. I hope we get it because I'm going to sell some more too. I'm going to join you. Because let
me know your level so I can get in front of you.
Well, you can find me in the chat room. You know where I'm at. Yeah, because by the way, if you guys want to just so you guys have an idea, here's the trades room. I'm just going to show you. I've added to dollar Mexican longs. I've sold some pound dollar with stops above 121. Stopped out the Kiwi overnight for negative 35 pips. Here, you can just go through the chat room. You can see exactly what I'm doing. You can actually see my open positions. When I get out, when I get out of trades, I'll post my open positions. You can see right where I'm open, P&L on those positions, and this way exactly what I'm carrying at all times. This is our trades room where there's not just myself. You can see obviously Kman's in there, all sorts of traders. Everybody's putting in their trades. That's aside from all the other chat rooms that we have in the ForexAnalytix community. So you want to know what I'm doing all the time, like Ryan's trying to get ahead of me.
A beer wants to
block him in the chat room is what I'm going to do. What?
Huh? A beer wants to subscribe to the service. Someone give them the link. And I'd like to add that if you're having some difficulties or you're in your first 2 or 3 years of trading, if it's not ours, find a good trading community, because that's what you need to immerse yourself in to speed up the learning curve. Okay, so there's plenty of knowledge in that chat room. You don't have to take all
and
the
it's
trades.
more than just that, Dale, because it's that was the trades room. But if you go inside the general chat room, you kind of know why I'm doing things or why other people are doing things. Like here's a prolonged. I'm gonna show you guys just a conversation that I had with Kman just a little while ago regarding the dollar Mexican peso. We got into a long just conversation about the charts and why I'm establishing long positions here. He knows pretty much my stance just from conversations here, right, Kman? But then we were talking about some of the longer term charts that I have identified, right? Yeah, I mean, having those types of conversations are good. And whether it makes whether you're right or wrong doesn't really matter, but you have an understanding of why people are doing things. And that's the most important thing when you trade, because Kman, you and I are approaching the dollar Mexican peso in 2 totally different ways, or the Mexican peso just in general. but I respect you enough to know that what you're saying I should be paying attention to, because I respect you as a trader, right?
Yeah, likewise, mate.
Yeah, and so I think that's really important about having a community. So Dale, when you talk about a community, yeah, it's great, you know, to have that support system, understanding where people are trading, why they're trading it. I'm not always right. I happen to be more right than wrong, you know, but I do get
Well,
trades
they have
wrong.
to learn that too. So
Yeah, and
you know, that's an
and I
important
think we all
lesson.
have to. So
Learning how
that's
to be wrong, how to be
right.
wrong. Yeah.
So yeah, a beer asks about you know, Forex Analytics. Just go to ForexAnalytix.com. Take a trial. It's $1. Anyway, I know you have I know you have an interview, a person that is waiting right now. I just want to say, you know, thanks for today's show. I know we have a lot of activity going on today, but Forex Gal asked me what's my favorite trade right now. You should go watch the week ahead video.
At the bar with a fresh beer in your hand.
What's that?
I said at the bar with a fresh beer in your hand.
That's right. Yeah, just go watch the week ahead video, because I really make my case on the dollar yen and why I'm being on the short side of that. And it's not dollar related. It's actually yen related. So if you understand why, and you can go watch last week's trade off with Chris Weston. Then you can go watch the previous week's week ahead video where I, you know, to also talk about the yen and what's the new BOJ governor's name?
UEFA. No, it's not UEFA.
I'm never going to pronounce that correctly. Ueda. Yeah. So anyway, that's where my head's at. Everything else is kind of secondary to me at the moment. So you guys have a great one. Dale, thank you for always guiding us. Have a great interview.
Okay.
Ryan, Kman, Stelios, you guys are rock stars. Thanks everyone.
Hey team, I'd like to ask you, would you like to go on my beautiful balloon? Now seeing it.
Nice.
Only if I can shoot you down, Dale.
All right.
All right.
Thank you, team. All right.
Cheers, guys.
Cheers, guys. Stephen, welcome back to F.A.C.E, my trading warrior brother. How are you?
I hope your trading's better than your singing, Dale. How you doing?
It's about the same. Huh?
Yeah,
I hit notes
we're in
and
trouble
I'm flat.
then.
Yeah. Maybe it's a little better anyway, because I'm sitting here at a desk and, I'm not out with a pick or shovel. But it's great to have you back. And, I get your emails, Stephen. I don't know if you want to talk about it, but I found it real interesting that I get your emails.
Yeah.
And you're talking about, most authors only talk about their own books. Okay. And Steve is an author. Okay. He is a writer. And here you are talking about someone else's book, The Art of Execution by Lee Freeman Shore. And sounds like you gleaned quite a bit from it. I'm wondering if you want to talk about, the 5 different categories that he came up with.
Yeah. Well, that'd be, I wasn't thinking I was going to talk about that, but yeah, for sure I can do that. And
okay.
What it was, I was on holiday in Dubai. We have 2 weeks ago was half term here in the UK. So I wanted to go skiing. My wife has decided that skiing's too dangerous. And so we went to Dubai. And Dubai, we normally go at Christmas, and we didn't go this year for various reasons. And it's a very, it's a nice place to go. It's very clean, good food, good hotels and everything else. It's a little bit soulless. But the great thing about it was I could sit by the swimming pool in some sunshine and read some books. And that's what I like to do. And,
right.
I went running in the morning and running in the gym in the evening. We did some stuff. We went out. But this book, Dale, really amazed me because it is a book that I read in an afternoon. It was, it was a couple of hours, 3 hours. But nice. I took 4 pages of notes. My notes were almost as long as the book. Yeah. And that's very, very unusual for me. And the reason I thought this was so interesting, and there is a code, and I should share the code with your listeners, because if you're interested, after I've told you about the book, if you're interested in it, the people at Harriman House are the publishers who also published my book, and they give me a code, and the code for this is AOE, Art of Execution 10, and that'll get you 10% off. If you want to get the ebook, that's quite a good way of doing it. But the thing that was very interesting about this book is that Lee Freeman Shore ran a fund of funds for Old Mutual, which is a big, mainly retail house, investor shop here. And the fund of funds was quite an unusual fund of funds, because he found the best investors in the world, the best equity investors in the world, and he asked them, each of them, to give him their best 10 ideas. So here he was going to the best investors anywhere in the world he could find. And this was a big fund. I mean, he invested $1 billion over a few years. And so people will give you money. Will give you their time if you're going to give them their money. And of the investors that he chose, each taking their 10 best ideas, less than 50%, 49% of those ideas made money. And I thought that was astonishing.
Yeah, it's a decent hit rate. Yeah.
No, I think that's a terrible hit rate.
Well, 49% is a bad hit rate.
Oh, yeah. I mean, these are, fundamental equity investors who are getting their 10 best ideas. I mean, I think your hit rate for that,
10 really best ideas. Okay.
Should be, I mean, if I would say 60% would be the minimum I would have expected it to be.
Okay.
And I mean, I would have, if I'd had a 49% success rate, my boss would have rocketed me. He said, you know what, Clapham, you're costing me a lot of money. I'm going to get a coin and toss that. That's what I'm going to do. I mean, it's I think 49% is just on that wrong side of a coin toss. I think that's really, really bad. But what was very interesting was, in spite of the fact that most of their ideas lost money, they made money overall. And what he did was he analyzed who made money and who lost money. And he looked at it through the lens of what did people do with winners and what did people do with losers? And so he starts off the book by looking at the people who lost money on the losing positions. And he called them rabbits, because they saw the stock going down and they were like rabbits caught in the headlights. They did nothing.
They were paralyzed. Okay.
They were paralyzed. And I think this is a really, really common failure.
A lot of rabbits out there.
Yeah.
Okay,
and you sit there watching it and you hope that it goes back up so you can get out at a profit. And
everyone's been a rabbit at one time.
Yeah, I think it is the most common failure. I mean, I laughed when I read it because I did it myself the other week.
Okay.
And I thought, oh, this has gone down, but I know it's going to bounce, and when it bounces, I'm going to get out. Yeah. I actually got out of this position, but it's a very, very common failing. And what the author did was he used to call people up and he used to say, look, the stock's going down, cut it or double up. And those are the next two classes of people. There were people who were very disciplined, and when they saw a loss, and a loss, their stop loss varied between 15 and 30 odd percent, or maybe it was 23%. They took their losses, and they were quite disciplined and quite religious about doing that. And that obviously is it's more of a trading mindset than an investing mindset, but it's a make money mindset. And he called those people assassins, which was They would kill the losers. And
yeah,
then
they had risk management skills.
yeah, and that is what you need to make money. You just accept that you're wrong and get out. And the last fund that I was working at, I worked with two guys. Each of them had been the head of prop desk trading at Morgan Stanley. Mm-hmm. You can imagine if you run Morgan Stanley's prop desk, you're probably quite good. And they'd both had a background in derivatives. And they were pretty ruthless on cutting, 15% down, you cut. It doesn't matter. And I've worked with people before who will cut and then revisit. So if you've got, if you lose 10%, let's not waste time thinking about it and discussing it. Let's cut the position and then talk about it. And the cutting the position allows you to make a much more rational and less emotional decision.
Yeah. You're not attached to it anymore.
Yeah. So that's a
Do you mean cut it by reducing size or getting out of all of it?
Well, I mean, this particular guy was a very, very skilled trader. So it's not somebody I worked with, but somebody I spent some time with and talked to at length. And he used to work for Moore Capital. And his philosophy was, I don't want to worry about whether I'm right or not, because the market is right. And if I cut the position and just eliminate it, then I can go back in. Yes, of course, there's a frictional cost associated with doing it, but he just found that this was a discipline that forced him to do what he didn't want to do. And I think that's a brilliant thing to do in investing, because if you make very rigid rules and don't allow yourself to do the things that will cost you money, you'll make fewer mistakes. And if you make fewer mistakes, you'll make more money. But I think people are very ill-disciplined about this. People don't understand this. So the assassins, I thought, were a very interesting group. It's not something that I aspire to be, because I'm a long-term investor and I try not to trade. And so I would like to think of myself as being more in the hunters camp, but the hunters can also become rabbits. And what the hunters did was they said, okay, when I enter into a position, I'm not going to enter into it with a full weighting. And if the share price falls, I'll then have the opportunity to top up. And this is quite typical, Dale, of value investors. And, that I would classify myself as a value investor. You go in and you think I think I'm getting it near the bottom, but you find it's not at the bottom. And this applies particularly to, if you're working in a big fund, as I did, you can't finesse your entry and exit points. You've got to be early, because once the stock is turned, the volume that you're putting into it will cause it to rise against you. So you've got to buy stocks when they're still falling. Even with dark
pools, Stephen, even with other ways to put positions on that you didn't have access to before. I mean, isn't that the reason for dark pools, is that, you could do something a little bit, more anonymously? And
I mean, it's not, we were very clever about the anonymity, because what we would do is we would buy through more than one broker, but be very disciplined about where we went. And we were very clever. It wasn't me doing it, but the dealers were very clever in their strategy. But if you're trying to buy a big slug of stock, and remember, I was working at a fund that had, at the peak, we had $7 billion under management. And you know, if we own something, we owned a lot of it, right?
Yeah.
So, you know, you just can't wait for it to bottom, because you know, at the bottom, the selling's stopped, right? And it's just the marginal buyer is forcing the price up. And if you try and go in size, you just squeeze the price against you. So we always went in this way. We always recognized that we didn't know where the bottom was. We thought there was value in offer. And we said, you know, the strategy would be, we'll buy a position, and I can't really say the size of the position, but we'll buy a position of X tens of millions of dollars. And then if the price falls by 10%, we'll buy another slug. If the price falls by 20%, we'll stop and we'll revisit and we'll say, have we missed anything? Has the thesis changed? You know, sometimes you know, you go, actually, I have got it wrong, and you have to accept that. But often we would have exactly the right idea. But the problem with fundamental investing is you know, I was investing on the basis of an analytical edge. I had seen something that the market hadn't yet priced in. You don't know when the market, there's not always a catalyst for this, right? You know, we wouldn't have done straightforward, oh, it's just cheap in too often. But sometimes you think that stock is just too cheap, and I don't think there's much downside in the earnings number, so I'm going to buy it. But you might wait 12 months before it goes up. And in the 12 months, it might continue to go down. And so you've just got to have a strategy for what you do if it continues to go down. And, you know, my philosophy is to have some risk limits in there so that, you know, how much are you prepared to put into this in the worst case? And obviously,
yeah, natural gas has been a recent example of something that's been historically cheap that then lost another 50% in value.
Yeah. Well, I mean, well, of course, with a commodity, it's more, they're more volatile. It's easier to do that. With an equity, for it to fall 50% in, you know, in a flat market, there's usually a reason for it. Yeah. And if it falls that much, we would really understand the reason, because it would, you know, it might be just a big seller. And as long as we were convinced that we had the right call, the big seller selling wouldn't necessarily frighten us. And often that would be an opportunity. You know, I've sat on the other side of $1 trillion asset manager who was the second largest shareholder in a stock that was bailing out. And their analyst and I had been on a trip to see this company's facilities. And he came away with a different opinion from me. I came away from actually thinking my valuation is really supported by this. And I had a valuation of 100% upside. But every day we sat, every day these guys sold another 1 million shares, you know, and we had to sit gradually accumulating it. But this
well, you mean they were diluting?
Yeah,
the company was floating. Yeah, I mean, that's one of the biggest risks. You know, that's something I'd like to ask you about. What is a good dilution? And is there even any such thing? What makes dilution of going to your currency, which is your shares, to maybe do a takeover or a buyout that makes it accretive or dilutive?
Well, that's very simple. I mean, you know, if you're buying another business at today's interest rates, even at today's interest rates, you've got to be paying a big multiple before it's dilutive. Because if you're using your equity as currency, then right, it's often dilutive, because unless your own currency is highly rated, if you're paying an acquisition premium, which is usually necessary, then often you're selling your own equity at lower price and you're paying to buy the other company. Yeah. So, you know, often equity-based deals are often dilutive, unless it's, you know, a serial acquirer that's got highly priced currency. But in this particular example, there was a very big asset manager that was a very large shareholder in this company, and they just got it wrong. And they allowed us to make an incredibly high return. And, you know, but the stock stayed depressed for months. And it took, I think, 6 or 9 months before that overhang of them selling their second largest position, you know, their second largest shareholder selling his entire position in the company, just completely swamped any buyers that had any interest.
Right.
And if we hadn't bought, the stock would have been even worse. But, you know, we just saw it as an opportunity to increase our weighting. And this is what this tribe of hunters that Lee Freeman Shore talks about, that they're the people that they average down in losing positions. And he points out that they generally remain optimistic. I mean, if you own something, you're familiar with the endowment bias, where they test people on their attraction to an object, and if it's an object that they've bought and paid for, they feel that it's worth more than an object in a shop. You know, because you own it, you feel it's worth more. And this is what all the investors that he talked to and invested with, they all felt that the things that they owned,
what they owned, were undervalued.
Yeah, even though they were going down, they felt that they were they were even more attractive at this price. And it was only the assassins who had a stop loss discipline who said, I don't care how attractive it is, it's going down, and I don't want to own things that are going down.
All right, why don't we cover raiders and connoisseurs?
Yeah, well, the other two tribes he associated with winners, so stocks that have gone up, and he called the raiders people who like to bank a quick profit. Now you know those people that you see down the pub, that they tell you about, you know, how much money they made in XYZ. They bought it last week, they sold it this week, made 10% on their money. They never run any winners. And the way to make money in the stock market is to run your winners and sell your losers, because the winners always go up more than you think is reasonable. I don't recall ever in my career owning a winning stock and being correct at where it would top out. They always overshoot. And even if you take, you know, even if you make a price objective sort of over optimistic, they generally carry on going up. And if you tell a winner quickly, you never make any money, because if you sell your winners quickly and you're cutting your losers, you've got to have more winners than losers. And as we know from the beginning of this conversation, there were more losers than winners.
Right.
So the raiders didn't make money. They'd be more likely to make money if there were raiders and assassins, but they probably still wouldn't make money. And the most successful group that he looked at, he called connoisseurs, because these guys ran their winners, but they also cut their losers. And they tended to make much better money. But interestingly, they were much worse than average at stock picking. They were only right 40% of the time. And, you know, when you read about George Soros, Soros had a very, very low hit rate. But when he won big. Huge.
You know, most of the wizards in Jack's books are kind of like that. And, you know, we have a thing here at Forex called Pattern and Plays, and the hit rate's about 52.8 or something like that. But because your R to R, your risk reward ratio is not 1-to-1, but you have an edge at 2-to-1, 3-to-1, you make money at 50%.
Yeah. I mean, you know, my skill, if I have one, is that I'm very good at the stock picking, right? So I'm very good at identifying those opportunities. And so I've got
Would
a much
you buy
higher,
miners? Would you buy miners down here?
I would buy miners, I'd buy energy. I'm a bit confused about the stock market, to be honest, at the moment, Dale. I don't have any.
But I got your immediate because they've gone pretty cheap after having a nice rally. I'm just wondering what you're thinking here. So you still kind of favored the commodity trade, and where's your head? Go ahead.
I do, and I still like gold. I mean, I know it hasn't done anything, but I'm.
Oh, it did.
Well, it hasn't really done. It hasn't reached the levels that I thought it would. But I wanted to I know you don't have much time left, but I just wanted to tell you that I went yesterday to a capital markets day from one of the big big retail managers in the UK, and every year they have an investor day for RIAs and wealth managers who like to invest in their funds, and they meet the fund managers. And I had a couple of really interesting meetings I just want to share with you, if I may.
Sure.
One of them was a Japanese manager. Now, they don't have a big Japanese fund. It's like $150 million. But the guy is very experienced, a lot of gray hair. And obviously, owning Japan and being a Japanese investor for the last 20 years would make you prematurely gray. But he said that there's a new rule that's been introduced by the Tokyo Stock Exchange, that if the valuation of your shares are less than book value, you have to disclose in your annual report what you're going to do to rectify it. And he said, and this is astonishing, what do you think the percentage of stocks that trade at a discount to book value in Japan is?
80%.
Oh, no, it's 50%. 50%. I was really surprised by that.
Yeah, so it's cheap.
So it's a cheap market, and there's some action, because the problem with Japan is that they like customers. They don't like shareholders very much, but they're being forced to pay more attention to shareholders. And the other meeting I went to was they've got a very big tech fund. They've got the largest tech team in Europe on the buy side. Not big compared to America. And they've got a $4.5 billion fund. They've got a $3.5 billion trust, which is quoted in the stock market, a closed-end fund. And they've got an automation fund, which is smaller, $350 million. But I bet one of the fund managers, because he reckons that their portfolio, the EPS growth in 2023, what do you think he reckons it's going to be?
Go ahead,
owns mainly US.
I've been guessing wrong
on.
What's that?
He owns mainly US tech. What do you think that their earnings per share growth for 2023 is?
I really, Stephen, tell me.
28%.
Okay. Yeah. Huh.
And I was like, I mean, I've taken a bet with the guy. I said, you can't be serious. Because, I'm looking at all these, these guys cutting employees, looking at the fallout from the dot-com bust, the VC bust, and all of that. But they were very confident about the opportunity in tech. I think the valuations, to me, after the recent rally, look a bit challenging, and I've been taking profit again. But it was interesting, and they weren't saying buy right now, but they're very confident about the medium-term outlook for tech. Now, it may just be that, if you've got $8 billion worth of assets, that you've got to be bullish. I don't know. I mean, there's always that, but
that's what makes a market, Stephen.
Yeah.
And you know what? You're a connoisseur of, hedge fund guys and money managers, because you go around, you're gumshoe, you're going up, you're talking to people, you're going to conferences, and hunger for wanting to know what's going on, and then Stephen passes on that info to people that subscribe to him. So best place to sign up for Here
Yeah,
you
well,
go,
it's
write it.
free, Dale. All your listeners should be signing up. They go to behindthebalancesheet.com. There's a sign up button on the top right, and every Sunday morning at 10 o'clock UK time, you'll get 1,000 words in your inbox. And you know, sometimes it's a book review, sometimes it's a conference I've been to. It's not stock tipping, but it's the idea is in 10 minutes a week, you should become a better investor.
Okay. So time is the most precious commodity, and Stephen curates it down for you guys. So I'm a connoisseur of guests, and appreciate you being one of them, Stephen, coming in every 3 months or so to fill us in, and really appreciate people that hold up other people's work instead of just holding up and tooting their own horn. So thank you for the recommendation of that book.
No worries. It's great to be back, Dale. I'll look forward to seeing you in 3 months' time.
All right, Steve Clapman, everyone, you can follow him at Steve Clapman on Twitter. And thanks, buddy. I'll be in touch with you and root for your mission and what you're trying to do for people.
Thank you. And it's Steve at Steve Clapham, Clapham, and Behind the Balance Sheet. Thank you, Dale. Take care.
All right.
Have a great day.
Steve.
Cheers.
All right. So that's a wrap, everyone. Join the team in 14 minutes on the Morning Edge. Good hunting the rest of the day. And we'll see you tomorrow. Don't just count your pips, count your blessings. Adios.